You might be wondering how a credit score works, or what it even is. For those of you asking, no, there is no game of credit, but there is a score. And this score, well, is what this mini crash course will be about. On this channel, we'll be exploring a range of personal finance topics that can help you achieve financial freedom. If you're interested in learning more about these topics, make sure to subscribe to the channel. Today's economy heavily relies on a good credit score, especially if you want to secure a mortgage, a student loan, or use your credit card to pay for your weekly groceries. You'll need a bank to provide you with a line of credit. You must remember, though, that you must be worthy of that line of credit. Your creditworthiness will be defined by your 3-digit credit score, which is an important factor in your financial life. A poor credit score can make it difficult to obtain loans or low-interest credit cards, making it difficult to borrow money for your necessities or desires. But before I explain why having a high and excellent credit score is important, let's start at the beginning. What is credit score? A credit score is a number lenders use to determine how probable it is that they will be repaid on time if they grant someone a loan or credit card. It is a number ranging from 300 to 850 that represents a consumer's creditworthiness. The higher the score, the more appealing a borrower seems to potential lenders. Your credit history, which includes accounts, total amount of debt, repayment history, and other criteria, is the basis of your credit score. The Fair Isaac Corporation, commonly known as FICO, developed the credit score model, which is utilized by financial institutions. While there are alternative credit scoring systems, the FICO score is by far the most widely used. Individuals' credit scores can be improved by repaying debts on time and keeping debt to a minimum. To sum it all up, a credit score plays a critical role in the lender's decision to offer credit. The FICO scoring system is widely used by many financial institutions. Credit score factors include repayment history, different types of loans, length of credit history, and an individual's overall debt. Credit usage, or the percentage of available credit that is presently being used, is one statistic used in generating a credit score. It is not always recommended to terminate an inactive credit account, because doing so might affect a person's credit score. So, what makes a good credit score? According to the FICO credit scoring system, credit ratings are classified into 5 categories, namely, poor credit, 300 to 579, fair credit, 580 to 669, good credit, 670 to 739, very good credit, 740 to 799, excellent credit, 800 to 850. All FICO credit scores between 670 and 739 are included in the good credit score category. Many individuals, however, consider excellent credit to be any FICO score better than 670. This means that if you have great or perfect credit, you automatically have decent credit. If your FICO credit score is more than 670, you not only have excellent credit, but you have also transferred your credit from the subprime to the prime category. People with good credit are more likely to benefit from the prime interest rate, which means you might pay less interest on credit cards, mortgages, and loans. Now, you may be wondering, how do I improve my credit score? Well, some simple techniques to increase your credit score are as follows. Loan and debt repayments are made on time and before the due date each month. Avoiding credit extensions and avoiding accepting unsolicited new card arrivals. Self-precaution goes a long way. Thus, disregarding past due invoices is a big no-no. Maintain an open channel of communication with the creditor and make plans for repayment while encountering financial difficulties. Being aware of the sort of credit card that is being used. Limiting the number of credit card applications is a surefire means of never exceeding your credit limits. Not overspending is the smartest option one can make while attempting to raise a credit score. One important thing when getting a good credit score is also keeping in mind how it is calculated. Your FICO credit score is made up of the following 5 factors. Payment history, 35%. Settling your payments on time is not just vital for avoiding late penalties. It is also the most significant aspect in your FICO score. Payment history, in fact, accounts for more than a third of that total. Even 1 or 2 late payments can have a significant influence on your credit score. Amounts owed, 30%. Another crucial component is the overall amount of debt you owe in contrast to your total accessible credit, which accounts for 1/3 of your FICO score. This is commonly referred to as your credit usage ratio, and experts advise keeping it below 30%. Length of credit history, 15%. Lenders want to know how long you've been in the credit game. The more credit history you have, the better. Credit mix, 10%. Your credit score is also boosted by diversifying your accounts. This demonstrates your ability to manage a range of bills, such as credit cards, school loans, or mortgage. Of course, your accounts must be in good standing, or they will have a negative influence on your FICO score. Recent credit inquiries, 10%. Too many hard inquiries and new accounts in a short period of time may raise the possibility that you are struggling to pay your expenses. So, if you're turned down for a credit card, don't try again. Instead, wait a few months and work on improving your credit. And if you're looking for a mortgage, vehicle loan, or student loan, do it within 45 days so that all of your inquiries are processed as one. Fortunately, this element only accounts for 10% of your FICO score, so creating a new account every now and then will have no effect. So, when building your habits to obtain a high credit score, always keep these 5 factors in mind. Now, how do I maintain it? Building a decent credit score is the first step, but keeping your great credit score will allow you to continue to reap the benefits of good credit. This includes having access to the top credit cards available today, which provides everything from cashback benefits to luxury vacation privileges. How can you keep your credit in good shape? Basically, you continue to practice the responsible credit behaviors that helped you achieve the decent credit score in the first place. Every bill should be paid on time, every time. Maintain a modest credit usage ratio to avoid utilizing more than 30% of your available credit. Instead of closing existing credit accounts, use them to demonstrate a long and responsible credit history. Maintaining a high credit score is frequently easier than acquiring new credit, but don't let your guard down. If you fail to pay your payments on time or have charge balances that you are unable to pay off, your credit score may begin to decline. Every year, you are legally entitled to a free credit report from each of the main credit agencies. These reports are available for purchase at annualcreditreport.com. There are also a variety of credit monitoring applications and services available, some of which are free that allow you to watch your credit throughout the year. If all this sounds too tiring for you, just know that when you have a bad credit score, the consequences can be immeasurable. I hope Credit Score 101 helped you understand the various aspects of credit scores, such as how to keep a high and decent credit, among other things. If you found this video helpful, please like it, subscribe, and leave a comment below with your credit score questions.